Hey everybody, Jack Lucky Mortgage Advisor here, and welcome to the third video in my Credit Basics series. Today we're going to talk about how to build and maintain a positive credit history. Let's get started. All right, the first thing we're going to talk about is how to build credit. If you are brand new to the credit scene and you are just trying to get started, you've probably already noticed that there's a bit of a catch-22 when it comes to building credit. You have to have credit to build credit. You apply for credit at a bank and they deny you because you have no credit. Yeah, that's why I'm here. Yeah, you know what I'm talking about. So here is in order the best ways I have found to get started building credit. The first and easiest and most effective is getting to be an authorized user on someone else's credit card. Now, this involves having someone else who has good credit who's willing to do this for you. The way this works is someone else has a credit card already that they are managing well. Otherwise this is kind of pointless if they don't manage it well. They can add you as an authorized user on their credit card. Now it sounds kind of sketchy, but it's actually a very good way to get started, and it's completely safe for the person doing this for you because they can add you as an authorized user, but they don't necessarily have to give you a card. So they can just add you on their account and you can't mess it up for them. So this is kind of a good way to get started. Once they add you as an authorized user, all their history on that card will show up on your credit report, and your credit score can skyrocket really fast using a strategy, especially if you have zero credit whatsoever until that point. So this is a great first and best option. Second one is applying for a credit card at a small chain store or a gas station. So you've probably already tried applying for all the main credit card places and get turned down. Try some small, like, gas station credit cards, or like your favorite department store. Some of them are a little bit easier to get into because they have less stringent credit requirements, because the real reason they're giving you that card is so you'll buy their merchandise, and they try to give you lots of discounts and things like that. So that's a good second option. And if all else fails, you can also do what's called a secured credit card. A secured credit card is basically a credit card with a security deposit. Kind of like when you rent an apartment, you have to put a security deposit down. So if you get a secured credit card, you can get one at pretty much any major bank, and most credit unions will do this. And you put down, say, like a $300 deposit, and they give you a credit card with a limit up to $300. And you can use that card responsibly to build your credit. And then you also need a mix of some installment loans in there too. Remember the credit mix. You want to have both if you're going to build credit. And by the way, the ideal recipe to build credit, if you're starting at square one or square zero, no credit whatsoever, what you want is 2 credit cards, 1 installment loan. That's the ideal mix to get started. If you're doing it strictly for building credit, this is the ideal mix: 2 credit cards, 1 installment loan. So the 2 credit cards can be a mixture of maybe being an authorized user on one and then getting a department store card, or 2 department store cards, or a department store card and a secured credit card, or worst case, 2 secured credit cards. And then you need an installment loan. Best way to get an installment loan to start out, if you can, if you are in the market for a car and you were planning on paying cash for a car, you can put a huge down payment, like 50% or 80% of the price of the car, and just get a loan for the rest. Getting that loan size down will help on the interest side, because when you don't have any credit, if they give you a car loan, it's going to have a really high interest rate, and it's not going to be a great deal for you. So if you can get that balance down as low as possible of how much you're going to owe, you'll be able to build credit while not paying exorbitant amounts of interest. Second option is if you already own a car, free and clear, You can also do a cash out loan on your car. It's a secured loan, so they're more likely to offer you this financing. Now, don't mishear me. I'm not talking about going to one of those title loan places and getting a title loan on your car. It is a title loan, but not from one of those title loan places. I'm talking about going to your bank or your credit union and seeing if they will give you a cash out loan, and do the smallest one you can. Because remember, we're not doing this because we need to borrow the money. We're doing this to build credit. The whole idea here is to build credit, and we want to do it as cheaply as possible. So the smallest loan size you can get, having at least a 1 year term, because remember, you need your trade lines to be over a year old. So a 1 year term on a secured loan using a car or something like that as collateral. Another option is getting a cosigner. And this goes back to having friends with good credit, kind of like the authorized user. If you have a friend who has good credit, who's willing to co-sign with you to do a car loan or installment loan or whatever, do that, and you'll get more favorable terms. And then the last option is a credit building loan. A lot of banks and credit unions offer these. It's basically a loan for the purpose of building credit. It usually requires a security deposit of the amount that you're borrowing. So a common scenario for this is you have $1,000 in the bank. The bank will hold that $1,000 and give you a loan for $1,000. And then to sum this up, you put that $1,000 in a savings account and use that $1,000 to pay back the $1,000 loan. It sounds convoluted and complicated, and it is a little ridiculous, but it is the best way to get started on a secured loan to build credit. And the interest rates on those are usually pretty cheap because they know they're getting it back. They've already got the money in the bank. So there you go. Those are your 7 best ways to get started building credit. Now, let's say you got those credit cards. You've got 1 or 2 credit cards. Now what? What do I do with it? Well, the first thing you need to understand is that a credit card is a tool, a dangerous tool. Think of it like a chainsaw. Chainsaws, when used properly, can do a lot of good. Chop down trees, trim limbs, make your yard look nice. Used improperly, they'll chop your arm off. That's what a credit card is like. When used properly, credit cards, you can earn credit card rewards, you can defer purchases for 30 days, you can build your credit. Used improperly, they can trash your credit and put you in thousands and thousands of dollars in debt. So how do you properly use a credit card? So the first thing is you do have to use the credit card. You can't just get the credit card and throw it in a drawer and try to pretend it doesn't exist because you're paranoid that you're going to misuse it. It's an understandable fear, and it's a good fear that you have, but it's not going to do you a whole lot of good. It's not going to help your credit out a whole lot if you don't use it. You do have to use it every month to get the most benefit out of it. But when you do, use it as little as possible. Remember the utilization. You want the utilization to be as low as possible. You can even go so far as once a month, buy yourself a candy bar and pay it off every month. That's one way to do this, and it will work. That will work very well. The next thing here is pay off the full balance each month. Now, I've heard other people out there, other credit people saying, no, you have to pay interest. You have to carry a balance, otherwise it doesn't work. That's not true. I've been in this industry for 9 years, and I can tell you from experience, paying off your credit card every month, not only do you not actually pay any interest, which I don't think I mentioned that, but credit cards, if you pay the full balance off every month, you don't actually pay any interest. You only pay the amount that you borrowed. They don't charge interest until the next month. So pay the full balance every month. It will work, and it does report to the credit bureaus that you're borrowing and paying back every month. That's what you want. So spend as little as possible and pay it off every month. A great way to do this, to automate it so you don't even have to think about it, is subscriptions. If you've got any kind of subscription, whether it's Netflix or a gym membership or your phone bill or a small utility bill or whatever, if they will take a credit card, put it on that credit card on an automatic payment, and then set up an automatic payment from your bank to pay the credit card. You see how that works? It's completely automatic. You're paying something you were going to buy anyway. You're not having to spend anything you weren't going to spend, and you're building credit. That's the best way to do it. And then the last thing is a stark warning. This credit card is not for you to go shopping and blow your money. It's also not an emergency fund for you to fall back on when you're on hard times. If you have a financial emergency, putting something on that credit card is going to make that emergency even worse. Don't do it. If you don't have the money in the bank, don't use the card at all. All right. So now you move into phase 2. You've got your 3 credit lines. You're working on building credit. What do you do now? Really, you just do the same thing we've been talking about this entire time. You continue to pay your bills on time as agreed. Super important. A late pay will haunt your credit for years. Don't do it. Don't miss a payment. Continue to pay down your debt balances. If you've racked up some credit card debt, work on paying that down. We'll talk more about that here in a minute. Keeping the utilization low as much as possible on those credit cards. Don't apply for too much credit. Don't be in the habit of applying for a credit card all the time. I know every time you go to the checkout line at your favorite department store, they're like, oh, do you want to get our credit card? We'll give you 50% off your next purchase. Don't do that. You're creating hard inquiries on your credit, and that's going to drag your score down. Paying your taxes and child support in full and on time. Now, wait a minute. Those don't show on your credit report. They do if you don't pay them. It's called collections and judgments. You've got to pay that stuff. Pay all your debts on time and as agreed. Regularly check your credit report for errors. Annualcreditreport.com. Check it over. Make sure everything's accurate and correct. And keep good financial records. So that's all for today. Now you know how to build and maintain a positive credit history. The next video, we're going to talk about what you do if you're already in a bad credit situation and you need to repair a poor credit score. So stay with me and we'll see you next time.